Basically, the market continues to shift. However, there's a bright spot.
That's a nice soundbite.
Rates are down significantly over just a month ago. That's your
significantly. Intro. Yeah. Oh, that's my intro? You want to take the intro?
I don't care.
I think you just did it. Okay, so we're going to take a look at the November numbers. November 2022, market continues to shift. Danny was kind enough to pull numbers. Danny, what do we have for this month?
Yeah, so it's a little bit of a mixed bag. We've got volume continuing to go down month over month. 1,800 and change homes were sold. In the month of November of this year, that's down 15% from October, and it's actually down 31% from November of 21. So yeah, things continue to slow down. Should be noted that there is seasonality here, right? This is the time of year where holidays start. People are kind of closing up shop a little to a certain extent. So there's seasonality, but there's also what we've seen over the last few months as we've been looking at this is since the rates have been rising throughout the summer, into the fall, and now into the winter, the level of activity has slowed, right?
Yeah, and that's slowed at a consistent pace. According to the charts, the rate has also been rising at a consistent pace, and I think that the market activity is slowing in relation to that. However, one bright spot we have as we look over these past 4 or 5 months that we've been tracking this more than that, the average sale price year over year is up 9%. So we're dropping in volume, we're dropping in average sale price, we're dropping in every metric that we have, except for what people are actually selling for on average.
Right. That's encouraging, right? I mean, things have, like you mentioned, over the last couple of months, they've ticked downward as well, right? So the peak was kind of in the summertime for us, and we're down 3% over last month in terms of the average sales price at just about 340,000 from about 351,000, right? So we're down, but compared to last year in November, 311,000 was the average sales price, so we're up 9% compared to that. So definitely a bright spot. When you look at percent sale price to list price, that too is one where we're seeing this kind of cooling down and reduction month over month over month. So last year it was 101% to the list price, meaning things were selling above asking, right?
On average.
For the last couple of months, it's been about 100%. So about things were going just about at asking. And now in November of this year, last month, we were down at 99%, meaning the list price was slightly below asking all in, right? That's a lot. But, the other thing that goes with that is the percent that were above asking, right? So you still had homes that went above. 30% of homes did go above asking last month. It's just that was a smaller proportion than months before.
Yeah, and that's a good number to track, especially as we're watching this market shift back to a normal, balanced market. I know a lot of people are worried about market crashing and things like that, but keep in mind this is a local survey of homes. This is our own MLS. Central Ohio, Midwest, still affordable. And the reason we're seeing the prices increase is because in relation to what else you're going to do, rents are going up just as fast. We don't have the numbers on that, obviously. But national averages can be a little confusing. That's why I like that we're doing our local numbers. And I'm honestly surprised that year over year, this November to last November was 3% interest rates. We're still selling for more money than we were a year ago. It's a very positive sign that lends to the affordability of the area, I think, more than the market itself. And I think we'll continue to see that improve as we go along. Now, one of the best pieces of data that we have here is in the past month, we've actually seen a interest rate drop.
Right. Yeah. So when we looked just at the beginning of December, we're looking at a 6.29% national average, right? And that's down from 7.25% at the beginning of November, right? So down almost a full 1%, which is huge compared to the way
Huge.
that things have been, of late. And that just plays right back into affordability, and the monthly payment that people can afford. So that was definitely a big bright spot. So it'll be interesting to see where things go, right? Because days on market was one of those things that also slowed down. We were at 22 days on market in November. That was up. It was only 19 in October. It was only 16 in November of last year. So definitely things are slowing. They're sitting a bit longer. You're seeing an increasing number of price reductions that have to occur to get places to move. And now we've got this late in the month of November, this ticking downward of the 30-year fixed rate. So it'll be interesting to see what happens from here. That may draw more people back into the market.
Yeah, we'll see how this shakes out. We're in the midst of the holiday season right now. That's the only thing that's might skew our numbers a bit. Obviously, we can compare to last year pretty easily. But it's great news. I think that the Fed is starting to drop rates. 7%, that was too high, in my own opinion. And I'm the guy that was saying forever that 3% was too low. 7% is too high. So we need to end up somewhere between 5 and 6 range. Everybody's comfortable there. It makes sense for houses and payments. Those are tend to be balanced around that 5-6% mark. And you don't have to come up with tens of thousands of dollars in cash at closing upfront. That makes a big difference too. So we're actually reaching a pretty sweet spot where, so to give you an example, the rate dropped about 1% in the past month. That's a big deal. That's $64 per 100,000. Okay, if you're buying a $300,000 house, that's $180 a month difference. That's a big difference. If you don't have to come up with 10% over asking, which is what we did this time last year, okay, in cash, so that's $30,000, and your payment is higher. The overall interest rate is higher, but compared to last month, it's down about $150, $200, depending on where you are, right? It's presenting sort of a sweet spot for buyers, assuming that we don't start seeing a lot of cash offers over asking again, appraisal gap coverage, things like that. We're in a good spot for buyers to get into a comfortable buying position, and that's going to sustain this market for a long time, I think.
Yeah, and as you look at inventory, right, that's the other thing to keep an eye on is, for as much as, the demand has gone down, the supply has also gone down as well, right? Got less people moving into their move-up home, right? Which means there's less people, there's less starter homes available, right? So there's kind of been this downward, in lockstep, both with supply and demand. So what we're really seeing is, right now, as of today, there's a little over 2,400 homes on the market that are active, that are available. And if you look at last month's appetite for homes, that puts us at a monthly supply of 1.3 months, right? Before we burn through all of that. So yeah, interesting to see where it goes from here. A lot less doom and gloom than last month.
Yeah, that's for sure. And it's funny how this timing works out, because we're really rolling into the holiday season right now. I think we're going to see inventory continue to slow, overall volume continue to slow. I'm curious as to how this is going to shake out year over year, because that's our best indicator. I kind of think this time last year, though, we knew that the Fed was going to start raising rates. So there was an increased pace there was increased demand even in December of last year. But overall, December is, when people take a break, we're worried about other things than moving. Also, who wants to move in December, right? We'll see how this shakes out. I'm hopeful for January. The fact that the Fed has lessened their aggressive stance on increasing rates is a big deal, and the markets seem to be responding. Mortgage rates are going to respond in kind. We're going to find a nice balance and then get to a point where, here's my prediction, 30 days on the market on average, versus 22 now. We're still in the ramp up stage here. We're going to start increasing. We're going to keep increasing our average sales price, and it's going to end up something like 6 to 10% year over year, which is like pretty solid investment for real estate, for a place for an expense that you have to have anyway. We'll see how that shakes out. I'm curious how December's numbers are going to work. Just anecdotally from the MLS notifications, seeing a lot less things for sure come up. Again, I think that's a seasonal difference. January, I think we're off to the races. So just keep that in mind. very curious as to where the rate's going to be in January, and market will respond in kind, as it has been. If you want specific numbers on your area, every area is different. And especially in this climate, markets are hyper local. And if you want to see how your particular market's moving, reach out and we'll get you those numbers for sure.